This is Striving Aspirants. Welcome back again to our new video presentation. Today our topic is trial balance and errors. As we know and as we are aware, trial balance is lying in between the ledger account balances and the financial statements. It is like a bridge that will connect the ledger balance and the financial statements. In other words, it is important for an accountant to ensure the equality or the agreement of trial balance in order to proceed to prepare financial statements. So it is important that the debit and the credit entries have been made correctly for each transaction. Even though the debit and credit entries have been made correctly, we can't conclude or proceed further, or we can't make a judgment upon this. It only provides an accuracy of the arithmetical correctness. Means whatever account balances, ledger balances we have posted to trial balance, that arithmetical correctness only we can conclude. While posting the balances from ledger account to the trial balance, errors can happen, which will affect the equality of debits and credits, and there can be errors which do not affect the equality of debits and credits. Let us see what are the common errors happening while posting the balances from ledger to the trial balance. Error in totaling of the debit and credit balance in the trial balance. Error in totaling of subsidiary books. Error in posting of the total of subsidiary books. Error in showing account balances in wrong column of the trial balance or in the wrong amount. Omission in showing an account balance in the trial balance. Error in the calculation of a ledger account balance. Error while posting a journal entry. A journal entry may not have been posted properly to the ledger. Means posting may be made with the wrong amount or the wrong side of the account or in the wrong account. Next error is error in recording a transaction in the journal, making a reverse entry. Means whatever account to be debited is credited and whatever amount to be credited is debited, or an entry with wrong amount. Error in recording a transaction in subsidiary book with wrong name or wrong amount. These are the common errors happening while posting the balances from the ledger to the trial balance. So the accountant should be very much careful regarding all these issues. Now let us check the common classification of errors. This can be classified into 4 categories: errors of commission, errors of omission, errors of principle, and compensating errors. First one is errors of commission. These errors are happening due to wrong posting of transactions, wrong totaling or wrong balancing of accounts, wrong casting or posting of the subsidiary books, wrong recording of amount in the books of original entry or the journal entry. Let us take one example here. Sky Blue Traders paid 25,000 to Sunrise Traders, a supplier. This transaction was correctly recorded in the cash book, but while posting to the ledger, Sunrise Traders account was debited with 2,500 only. So here in this example we can see wrong amount is posted. So this one is a error of commission, and this can be called as a clerical error or the mistake in the amount, and that will lead to a mistake in the trial balance. Next one is error of omission. This will occur at the time of recording the transaction in the book of original entry that is the journal entry, or while posting to the ledger. This can be two types: error of complete omission and error of partial omission. When a transaction is completely omitted or ignored or not being recorded in the books of original record, it is an error of complete omission. Example: credit sales to XYZ Enterprise 10,000. Not at all recorded in sales book. It's completely ignored or omitted. That is the error of complete omission. When a transaction is partly omitted from the books, it is an error of partial omission. Example: credit sales had been duly recorded in sales book, but posting from sales book to XYZ Enterprise account has not been made. So this is an error of partial omission. Next one is errors of principle. It is important for the company to prepare the accounting entries or to record the accounting entries as per the GAAP, means the generally accepted accounting principles. If there is a violation or if there is an ignorance regarding these principles, such errors is called errors of principle. So error of principle may occur due to incorrect classification of expenditure or receipt between capital and revenue. So this should be seriously taken care of, because this will affect the financial statements and there will be impact of these all errors in the financial statements. It may lead to under or overstating of income, assets, liabilities, etc. Let us check some examples of the errors coming under this one. Amount spent on additions to the buildings should be treated as capital expenditure and must be debited to asset account. If this amount is debited to maintenance and repairs account, then it will be treated as a revenue expense. So this is a error of principle. Similarly, if a credit purchase of machinery, it is recorded in purchase book instead of journal prop, or rent paid to the landlord is recorded in cash book as payment to landlord, this all is errors of principle that will affect the equality of trial balance. Next one is compensating errors. Some type of errors may happen in the accounts that will be compensated or that will be closed between the accounts. This type of errors will not affect the trial balance agreement or equality, but this will be having the effect in the financial statements. So this type of errors should be taken care of. Let us check one example related to this one. If purchase book has been overcast by 10,000, resulting in excess debit of 10,000 in purchases account, and sales return book is undercast by 10,000, resulting in short debit to sales returns account, is a case of two errors, but they are compensating each other's effect. In other words, we can say one plus is set off by other minus. The net effect of these two errors is nil. Means we can't find it out in the end. Means that is compensated. Two entries and the two accounts are compensated together and it is closed in such a way that it is very difficult to find it out. So it should be carefully note. if there is a chance of happening this type of errors while posting from ledger accounts to the trial balance. So that's all about the trial balance and errors. We have only seen the introductory part and classification of errors. We will be continuing the second part of this one in the upcoming video. Until then, it's bye from striving aspirants. Subscribe our channel to get education and learning contents. Take care and bye bye.